Will the Fed's next move make or break the housing market? If you've been sitting on the sidelines waiting and praying for the Fed to drop rates so you can buy your dream home, or if you're just concerned about how interest rates could impact your home buying or selling plans, you're in the right place. In today's video, we're diving deep into the Federal Reserve's decisions on interest rates and what they mean for the housing market, both on a national level and right here in Luzerne County. We'll be discussing the realities of what a Fed rate could bring, not just in theory, but in practical terms that matter to you. Whether you're a buyer, seller, or investor, understanding these shifts could make all the difference in your next move. For those of you who don't know me, I'm Chris Madden, a dedicated real estate professional serving Luzerne County. My goal is to help you understand and navigate today's complex real estate market with both confidence and clarity. If you find this video helpful, don't forget to hit that subscribe button and ring the notification bell so you never miss an update on the latest market trends. Let's start by taking a closer look at the current state of the housing market, both nationally and right here in Northeast PA. It's no secret that the real estate market has been slowing down recently. Across the country, we're seeing homes stay on the market longer than they did just a few months ago. In fact, the average days on market is increasing, signaling that the frenzy of quick sales we saw during the pandemic isn't just cooling off, it's over. One of the most telling signs of this shift is the recent data from Zillow's July housing market report. According to Zillow, 26% of all homes listed in July had price reductions. This is a significant increase from earlier in the year, indicating that sellers are starting to adjust their expectations as the market slows. It's a clear sign that the days of bidding wars and skyrocketing prices might be coming to an end, at least for now. Zooming in on our local market here in Luzerne County, the slowdown is even more apparent. Homes are now sitting on the market for over a month before they sell. That's a big change from the rapid pace we were seeing just last year. This extended time on the market is putting pressures on sellers to be more realistic with their pricing and to make their properties as appealing as possible to the fewer buyers who are actively looking and can afford to buy. But it's not just the pace of sales that's changing. Affordability is a major issue, especially for first-time homebuyers. The combination of rising interest rates, higher home prices, and stagnant wages is making it incredibly difficult for many first-time homebuyers to afford a starter home. In some cases, the monthly mortgage payment on a median-price home is now out of reach for a large segment of potential buyers. This is particularly challenging in areas like ours, where the market is traditionally more affordable, but still out of the reach for so many due to these economic pressures. As we navigate these challenges, it's important to remember that every market shift presents both challenges and opportunities. Whether you're a buyer, seller, or simply trying to understand what's happening in the market, staying informed is key. In the next section, we're going to dive into how the Federal Reserve's decision on interest rates are playing a role in these market dynamics and what they could mean for you. Now let's talk about the role of the Federal Reserve and how its decision on interest rates are influencing the housing market. Over the past year, we've seen a lot of potential buyers sitting on the sidelines, hesitant to jump in the market due to high home prices and rising interest rates. Many of these buyers have been waiting, hoping for a significant drop in rates that would make home ownership more affordable. But the reality is that the relief they're hoping for may not come as soon or as dramatically as they expect. As we look ahead to the upcoming September FOMC meeting, the current odds suggest that we might only see a modest 25 basis point reduction in interest rates. While any reduction can help ease borrowing costs, a 25% basis point cut is unlikely to have the sweeping impact many buyers are hoping for. In fact, the difference it makes might be more psychological than financial. Let's break it down with some local context. Here in Luzerne County, the average home sale price is $232,000 as of July 31st. If the Fed does reduce rates by 25 basis points, that would translate to a savings of roughly $38 a month on a mortgage for a home at that price. While any savings is helpful, $38 a month is unlikely to be the game changer that entices those hesitant buyers off the sidelines and into the market. This modest reduction won't be enough to offset the high home prices and broader affordability challenges that many first-time homebuyers are facing. So while we may see some movement if rates do come down slightly, it is important to set realistic expectations. The market isn't going to turn on a dime with a small rate cut. Instead, it's likely to remain challenging for those trying to break into homeownership. Understanding these dynamics is crucial for anyone looking to buy or sell in today's market. In the next section, we're going to explore what these potential changes mean for buyers, sellers, and investors, and how you can navigate this complex environment. So, what does this all mean for you? Whether you're a buyer, seller, or investor. The truth is, the reality of the current market might not be what everyone wants to hear, but it's important to face it head on so you can make informed decisions. For buyers, especially first time buyers, the market remains tough. Even with a potential rate cut, the high prices and the minimal impact of a 25 basis point reduction means that affordability is still a major hurdle. The dream of homeownership might feel out of reach for many, but it's crucial to stay informed and prepared. If you're in a position to buy, consider working closely with a real estate professional who can help you navigate the best deals and potentially find properties that might be slightly below market value or in emerging neighborhoods where prices are more reasonable. For sellers, regardless of what you think, this isn't the market where you can just list your home at any price and expect multiple offers above asking. The days of rapid sales are slowing down, and with more homes staying on the market longer, it's critical to price your home realistically from the start. Overpricing can lead to your home sitting on the market for months, forcing you to eventually reduce the price, which might end up being lower than that if you had priced it correctly to begin with. Staging and marketing your home effectively are more important than ever to make it stand out in this cooling market. Investors, on the other hand, may find this market presents both challenges and opportunities. On one hand, rising interest rates have made financing deals more expensive, and the potential for significant appreciation has diminished in many areas. But on the other hand, as the market cools, there might be opportunities to pick up properties at a discount, particularly from sellers who need to move from their homes quickly. For those with cash or secure financing, now could be a great time to start looking for deals that weren't available just a year ago. The key takeaway is everyone that's in the market, it's got to know it's shifting. And with that shift comes a need for new strategies. Buyers need to be more patient and diligent, sellers need to be realistic and proactive, and investors need to stay sharp and be ready to move on opportunities when they arise. This isn't a time to panic, but rather a time to plan carefully and take action based on a clear understanding of the market dynamics. As we move forward, remember that knowledge is power. Staying informed about the latest market trends and understanding what they mean for your specific situation is the best way to navigate these uncertain times. In the next section, we're going to look at what the future might hold and how you can prepare for whatever comes next. So as we look ahead, it's important to recognize that the housing market doesn't exist in a vacuum. The broader economy plays a significant role in shaping what happens in real estate. And right now, the economic outlook is filled with uncertainty. Over the next 16 to 24 months, we're likely to experience turbulent period, not just in the housing market, but across the U.S. economy. Several factors at play here. Inflation remains a concern, and the Federal Reserve is walking a tightrope as it tries to balance taming inflation with avoiding a deeper economic slowdown. Interest rates, which are directly impacted by mortgage rates and therefore housing affordability, will continue to be a critical factor. Even if the Fed does make small rate cuts, as we discussed earlier, those reductions might not be enough to counteract other economic pressures that are weighing on the market. For those housing markets specifically, this means we could see continued volatility. Prices may fluctuate, inventory levels could remain tight, and buyer demand is going to ebb and flow depending on the broader economic conditions. For many, this creates uncertainty and hesitation, whether it's the fear of buying at the wrong time or the concern that selling now could mean missing out on potential future gains. But with this turbulence also comes opportunity. For those who stay informed and are prepared to act strategically, there could be chances to make smart moves, whether you're buying, selling, or investing. Understanding that the next year or two may be rocky is key. By planning ahead, setting realistic expectations, and being ready to adapt to changing conditions, you can navigate this period successfully. Ultimately, the housing market is resilient, but it's also sensitive to the economy ups and downs. As we move into this uncertain period, it's more important than ever to stay connected to what's happening in the market and the broader economy. In the end, those who are well informed and flexible will be best positioned to weather the storm and come out ahead. So there you have it, a comprehensive look at the current housing market, the role of the Federal Reserve, and what all this means for you as a buyer, seller, or investor. We've explored the realities of today's market, from the slowing pace of home sales to the modest impact of potential rate cuts and the challenges facing first-time homebuyers. We've also looked ahead at what the future might hold acknowledging that the road ahead could be a bit bumpy as the broader economy faces its own set of challenges. Remember, knowledge is power. By staying informed and understanding these market dynamics, you're already ahead of the game. Whether you're looking to buy, sell, or invest, having a clear plan and realistic expectations will be the key to making smart decisions in the coming months. I encourage you to take action now, whether that means getting pre-approved for a mortgage, having your home professionally appraised, or simply staying updated on market trends. And if you're still unsure about your next step, don't hesitate to reach out. I'm here to help you navigate these complexities and find the best path forward for your unique situation. If you found this video helpful, make sure to give it a thumbs up, share it with others who might benefit, and don't forget to subscribe to my channel for more insights and updates. I'd love to hear your thoughts. What are your predictions for the housing market? Drop a comment below and let's start a conversation. Thank you for watching, and I look forward to guiding you through these challenging times. Remember, even in a turbulent market, there are always opportunities waiting to be discovered. Till then, take care.